All right, ladies and gentlemen, I know it's always much harder to get a conversation to stop than it is to start it, which is a good sign. It means that you're all engaged and it clearly sparked a lot of conversation, which is wonderful. So, just like this morning, I will be making the rounds, trying to find some faces that don't look terrified of me and my microphone. And yeah, asking you how the discussion was. So maybe I'll try the second row this time, since we did the first one this morning. How was the discussion in your group? What were your takeaways, and were you able to find common ground, and what did you think of the keynote and the points, the vision?
We discussed a little bit about, we know about fear of missing out, and we also said that the joy of missing out is important. You know, I'm finishing my master's in business analytics. We constantly think about the future. We predict, we forecast, and I realize I forget to enjoy the moment. And there's so much joy in the moment, so much asset, so much that I think we forget about, that is there for us, should we choose to accept it, to embrace it. And that's, in my opinion, and what we discussed, is the missing key that will open up those new potentials of innovation without necessarily having to have constantly more.
Very interesting. Thank you so much for sharing. So the joy also of missing out, of knowing what kind of competition we want to win, of knowing what kind of growth we want, and of maybe also actively choosing sometimes to miss out. Let's see back here. You don't seem terrified. I'm going to ask you. So what was the discussion like in your group, and could you find common ground?
Well, with a hard one here, because I have a politician next to me. But as Ignacio Cassi said, we need to face the discussion and also not only speak to like-minded people, also to people who have different opinions. So I think it was an interesting discussion. Of course, not everyone agrees to the theory of degrowth. I can understand that, especially in terms where, well, we have economic crisis around us. So it's a difficult one, and honestly, I don't see like an easy solution, like, to the question, right? We need certain growth, we need economic dynamism. At the same time, we have a climate crisis. So, it's a real challenge.
Honestly, had you solved the question now in those 8 minutes, I would have been more surprised. So I'm not surprised that you're telling me that there are still some questions to discuss, and I think that's what the breaks are here for as well, to continue the discussions. And maybe one final voice from the audience.
We talked about several things, one of them being the definition of growth. Maybe potentially it could be tied to something other than monetary value, than money. What changed around you? What have you done that improved life around you and made things better for others? One interesting thing that we noticed is that at some point, I think yesterday, it was pointed out that Europe is doing too few work hours. And then today it was that we should be doing fewer work hours. So there was a bit of discussion to be had also on the level we are here to understand where people are coming from in terms of what is this efficiency and growth.
So we'd like to see a match between...
Thank you so much. So you'd like to see the discussion between do we work too much or too little? That's a very good point. But thank you for bringing in, maybe measuring growth of impact versus growth of business alone. Thank you so much for sharing those outcomes from the discussions. Well, let's see what our next speaker has to say about all of that, about how the economy is growing, what we're measuring, about what it means to get back to business. Because obviously, global supply chains are very much under pressure from all these uncertainties that we've been talking about today. And increased trade barriers, technological disruption are adding to that uncertainty. So, how should businesses deal with that volatility, and how can they remain resilient? Our next speaker is brilliantly placed to answer those questions. He heads a leading logistics company operating in almost 100 countries. and one of the first businesses, of course, to fully really feel the consequences of this global upheaval. So I'll be speaking to him today about how markets have changed and how businesses can adapt. Ladies and gentlemen, please give a very warm welcome to the CEO of Kühne & Nagel, Stefan Paul. Thank you so much for joining us.
Thank you so much for having me. Good afternoon.
It's wonderful to have you here. I think we'll come to talk a little bit about the question of growth later, but first I really want to ask you, I mean, as somebody who heads a business that is so directly impacted, what has changed in your work since Trump's quote-unquote Liberation Day, where the United States announced these sweeping tariffs on a number of countries, and this is sort of the moment where global trade became significantly more unpredictable?
Quite a lot. But before I start to share a little bit the figures and what has happened since April, let me just say a couple of words about my company, right, Kühne & Nagel, what we are, and you said it quite rightly, so we are active in 100 countries, 1,300 offices around the globe. We are the leading company when it comes to volume in sea freight and air freight in both, and we have as well two other business units, which is road and contract logistics, which we talk fulfillment and delivery. So what have we seen since April 2025? So quite a lot, and you see a number here on the chart. So pretty quickly, within 2 or 3 weeks, the export volume, I'm talking about sea freight volumes, you have 180 million containers flying around basically on a global trade lanes. And the largest trade lane is intra-Asia, and the second largest is Asia to the US Transpac. And within 3 weeks, approximately 3 weeks, 50% of the imports to the US exports from China disappeared. So 50%, just to give you a number, were not being shipped within 3 weeks after the tariff came into play, or the new tariff structure came into play. And that is a fundamental shift of trade lanes and habits in terms of how export or input companies are acting when certain things are happening, similar to COVID. In COVID, 50% of the global flows disappeared after a couple of weeks, 2 months or so, and this impact was even more severe. It only took 3 weeks before the imports into the US really collapsed completely. But what is interesting as well is we only talk about this factor, yeah? So at the same time, intra-Asia has grown by 8 or 9%. So China basically was able at the same time to grow their export business in total by 8% by giving up 25% of their export volumes into the US. So you see, certain countries are rather agile, right? And you don't have that so much here in Europe on the radar screen because nobody talks about it. So China is more powerful than before in terms of the volume they control out of China to the rest of the world, and in particular as well their shift to Southeast Asia, which we most probably come in a minute even more, right? So there was a significant change in trade lanes from China to the US, to a certain degree compensated by Southeast Asia. So what you have seen is, and that is a pattern you have seen already since a couple of years during pandemic, there's a shift, shoring, nearshoring from a pure China workbench perspective into Southeast Asia. So countries like Thailand, Vietnam, for instance, Taipei as well in the tech sector, and India subcontinent have grown significantly their output or outbound flows to the United States and to other markets. So that has happened, and quite severe for us, of course, right? Because if you have volume commitments from one country to another and all of a sudden you don't have customers, but you have commitments to your partners, it's not easy to fix, and that puts your P&L pretty much under pressure in a very short time frame.
So then how do you fix it?
So how do we fix it, basically? Good one. This is exactly what my investors ask me as well every quarter.
There you go.
And I say, so now what you can do, and what we have done basically is, we are organized in certain verticals. So we focus on 6 or 7 key verticals. And what you see is certain verticals are declining. For instance, the consumer sentiment into the US is pretty much down, right? We all know. But we have other sentiments or other verticals which are still growing. It's the healthcare pharma sector, which is growing since years. Another sector is growing. It's the global perishable business, and the reason is pretty simple. We all eat more fish, sushi, sashimi. Every day, you guys, you go for salmon and other stuff, and this is what we fly around the globe, right? And this is growing every year by 3-4%, even without doing anything. So that is a growth area. But the largest growth area is the technology sector. And the technology sector is interesting, is the hyperscalers, right? So does anybody don't know what a hyperscaler is? Should I explain it? Maybe I should?
You should.
Yeah. So a hyperscaler is a company which is putting AI at the forefront of everything what they do. I give you an example of hyperscalers. You have 5 companies in the world. It's AWS, Amazon, it's Microsoft, it's NVIDIA, it's Oracle, it's Google. So 5-6 companies and a couple of others. And these guys, basically, they have a huge demand currently of international air freight shipments out of Asia into the US. And I always compare that every second or 3 years, you have another phenomenon. During the pandemic, you had the phenomenon about e-commerce, Shein and Temu. Some of you most probably still buy, right? Or for the elderly ones, the kids, they regularly purchase with Shein and Temu. And these 2 companies, before I come back to the hyperscalers to give you a little bit of a flavor as well, these 2 companies during the pandemic, they started their business during the pandemic, Shein and Temu both. They, within 3 years, these 2 companies, now listen what I'm telling you, these 2 companies together controlled 40% of the entire air freight capacity out of China to the world. In comparison, DHL and Kühne-Nagel are the 2 largest air freight, or one of the 2 largest air freight forwarders in the world. We both together globally have the same volume than Shein and Temu together out of China globally. So they export the same out of China than the 2 largest forwarders in the world together globally. So just to give you a little bit of a flavor. And that e-commerce phenomenon was built up during the pandemic, and you were asking me, what do you do? So you need to focus in supply chain, you need to focus as a logistics company on the growing sectors, which we did with e-commerce. Now the hyperscalers, this is the new hype of the world. Just to give you a flavor, this industry is investing $3.3 trillion until 2030, and it's growing with 35% CAGR until 2030. So there is a run on all NVIDIA chips and all the data racks you can think about to build up data centers, mainly in the US. I come in a second why mainly in the US, because this is everything what is powering AI. Digital twins, agentic AI, everything what you do, right, is powered by this data center. And they need hardware. And the hardware is something which we fly in and put into their end-to-end supply chain into the data center. So this is what you do. You focus on verticals where you see growth, irrespectively of geopolitics.
I want to talk to you about some of those companies that you just mentioned, Meta, Microsoft, Amazon. I know you're obviously fostering working relationships with them, right? So given the political shift, has anything changed about how you think about these relationships with US companies?
Not at all. I think what is interesting to know is, and you have seen a slide here, just to give you an example, what is the volume? We fly 14 747s every week for them from only one location from North China, Hanoi, into the US, right? 14 747, only from one location. So it gives you a little bit of a flavor how much it is. No, it didn't change. It didn't change at all, because these companies are mainly sourcing in Southeast Asia. They're not sourcing in China. So the relationship has not changed based on the geopolitical dimensions or development, and it has no impact for us serving these customers. It's more about what do they need from their service suppliers, and how can you cope with the huge demand bringing their cargo into the US data centers. But geopolitics has no impact on the hyperscalers currently at all, at least not from our perspective.
So when I asked you, how to fix it, how to fix the issue, how to deal with this uncertainty, you told me that the key is basically to focus on sectors that are still growing. Would that be your suggestion, your recommendation for the leaders in this room as well to deal with the uncertainty that we're seeing now, is to focus on what still works and focus on what is growing?
First of all, when you are in business, you always have to choose your battles and look into where can you grow, how can I grow, what do I need to do in order to grow my footprint. What I do on a regular basis, and this is what I can only recommend every leader, right? And I know a lot of my colleagues on the Swiss side do that as well on a regular basis. Don't stay at your office desk, right? Take the aircraft and go to China, to Asia, to the US, to the main markets, basically. You have two markets as international business. You have the China-Asia market and you have the US market. In between is more the consumer sentiment, but this is where the powerhouse is, right? So China and Asia for certain industry, leading certain industry. Everything outside, I would say, the semicon, hyperscaler, high-tech industry, this is pretty much dominated or purely dominated by the US, and this is where you have to be. You need to be where the power is. You need to be where the innovation comes from. You need to talk to the people in order to really capture and understand what's going on to drive the answers in your company.
I mean, I'm just going to have to take up that quote again because we're at a conference on how to make Europe stronger, and you just said you basically have two markets, the United States and Asia. So did I misunderstand something?
Which is not my problem, right?
So, I mean, is that something that you think we should potentially work on changing?
No, I think the problem statement for me is, and this is what we see, right? Europe was the powerhouse. We are 135 years in business. Europe was the powerhouse for decades for us. Our footprint in Europe was the strongest by far, stronger than US and Asia for decades. And then we saw a decline of business habits and business development and growth in Europe. And this is the problem. Basically, we do not have industries, or a lot of industries, I would say, a lot of sectors which are still dominating their industries or the world market coming from Europe. We have pharma, we have healthcare, we have a little bit of a luxury industry here as well, which is still growing and strong. But the two other geopolitical powerhouses, China and US, they dominate the future technologies so much. If you look at 8 out of the 10 renewable energy companies are coming from China, only 2 in Europe, right? One is very successful, it's a German company with S at the beginning. The other one is in Denmark, but all the others are located in China. And I talked about the hyperscalers, all of them are in the US. You have this BEV industry, the mobile industry, not the mobile, the car industry, which is in the meanwhile pretty much dominated as well by Chinese manufacturers. So how do we create a stronger European powerhouse? It's really difficult for me to answer because I do not have the silver bullet. I don't see the answer. But at least what we need to do in Europe, we need to collaborate and we need to work much closer with each other amongst the European countries in order to have even a slight chance to beat the other two or to cope with the speed and execution capabilities of the other two.
And if I understood the first part of your problem analysis correctly, you also say that Europe's problem is that it's not growing enough.
I can only share a little bit what I see in my business. So what I see in my business is that the two largest economies, France and Germany, on a constant basis from a domestic consumption perspective are declining, right? Germany, I think growth is minus 0.2% or so to be expected next year, and this is what we see. So from a volume point of view, what we carry in our networks, in the road networks in Germany and France, is between 6 and 8% less volume than 2 years ago. So the consumption is really soft and is declining year after year. And that is as well something which is really concerning because if the end consumer is not buying, is not pushing anymore, then for us as a logistics service provider, we can only reduce our network, we need to reduce our manpower in order to cope with the development. But this is what we see.
And I mean, would you say that this measure of consumption is a good measure to tell us where Europe and its economy stand? Is that the measure that we should be keeping an eye on, that managers should be keeping an eye on to understand where the European economy is headed, or are there others?
There are other KPIs, and we all know they are international and standard KPIs you can look in. And what is really interesting, and I mentioned at the beginning of our discussion, I mentioned a little bit what has happened with the trade flows between China in particular and the US. At the same time, Europe has imported 50% more than a year before. But importing goods is not creating value for the industry. It's us consuming something, and the e-commerce companies in China and in Asia, they have pushed a lot of products with low price levels into the European marketplace because US was somehow a closed shop for them due to the missing de minimis regulation, where you had up to $800 before Trump came into play, Trump 2, you had a possibility to get cargo or get shipments in for $800 tax-free. And that is not possible anymore. And what the Chinese do rather quickly, and they do it within hours rather than weeks, they shift their focus, and they shifted their focus to Europe, and they have flooded us with their cheap Charlie products, so 15% more influx to Europe at the same time.
So consumption, you say, is one metric to look at, but it's not the only one.
Yeah, I would. Consumption is one metric, but it's the investments into Europe, and this is constantly going down, right? Industry investments and the foreign investments into Europe and the production capabilities and the leading technology from a European perspective. I think this is where you need to look at. Do you have industry fields and expertise where you still have the chance to lead global economies or to lead your sector? And this is what I currently see, at least from our perspective, is really a challenge.
I want to zoom out and ask you maybe a little bit more of a philosophical question, but before I do that, ladies and gentlemen, as always, you have the option of asking your questions as well to Stefan Paul. There will be a QR code shown in just a moment, and you know the procedure, you know the drill by now. You scan it, you enter your question, and I will pass it along from up here. So I know that you're a big advocate for globalization, you're a fan of globalization, but we're seeing such a strong comeback from mercantilism, from protectionism, and in fact, the people proposing or pushing that comeback were voted into office because a lot of people feel like globalization didn't work for them. So is it time to admit that globalization, at least partly, has failed?
If I would say yes, then I put my company into a risk position, yeah? So, first of all, look at the facts. And you see that slide here, right? Globalization was really helpful for the welfare of the world. In 1990, the World Bank, there is an index basically of extreme poverty. This is $2.15 per day. And that has shifted from 40% in 1990 to less than 10% nowadays. So I think almost all countries around the globe, have clearly benefited from the globalization in the last couple of decades. So what we see from our data as well is that global trade currently in sea freight is growing between 3% and 4% on an annualized basis. And you can always argue about nearshoring, shoreshoring. Of course, the US administration, they bring quite a few industries back home into the US and try to really beat China with that. For instance, all the tech industry, right? So automotive to a certain degree, but the tech industry, and they protect their countries, their country with certain measures which we all know. But at the end of the day, I don't believe that neither the Americans nor we Europeans will produce T-shirts or garden furniture or anything like that in our home markets, because first of all, the labor is not there, and secondly, it's far too expensive. So, and that is for me as well a proof point that a certain amount of globalization and global trade will be ongoing, and this is as well what our data influx is confirming us. There is still global trade ongoing, and there is a certain growth aspiration to be expected. Look at China, for instance. We always, if you open the news here in Europe, it's this typical China bashing, right? They are not growing, they have a real estate crisis, they're in big problem mode. So they still grow their economy by 4.8%, which is equal to the entire economy of Poland, which is worth 900 billion. Ask the Germans, right? So it's sometimes really important to look into the facts and to understand where growth is coming from. And I can only repeat myself, and I see the growth is pretty much happening in intra-Asia, within Asia, and of course in the US, but this is pretty much driven by 50% of the companies we have just mentioned before.
Let's talk about growth, because you've mentioned it so many times now in your answer, and relating to the previous keynote, I feel like I have to ask. So you've mentioned it as a driver of positive change, essentially. And Kühne + Nagel, I know, has set the goal to grow at 1.5 times global GDP growth through up all the way to 2030. So after what we just heard in the previous keynote, and after talking about, maybe we should reconsider what it is that we're actually growing, can you speak to that goal? Are you tempted to reconsider it at all?
No, not at all. So, no, not at all. So, I have a different opinion, but this is my personal opinion, right? So I do not concur with what not all of them, what I have heard before. But it's pretty simple. We are the market leader in sea freight, air freight globally, and our market share is below 8%. 90% of the market is still for us, right? And we have hundreds, thousands of smaller forwarders which we can compete with, and we have 2 other large competitors. So 3 of us are controlling basically a certain amount. So with 90% open to, or 90% which is not in our book, I could even say we grow 2 or 3 times GDP growth if we have the capability. So I would always again say you have to put it into perspective and not only look at the big pictures. In your individual market, if you do not dominate your market with 25, 30, 40% of your market share, you still have huge opportunities to grow. And you find industries where you can grow if you're agile, flexible, and hungry enough.
What are your thoughts on the European market and the industries in Europe that you see as most promising? Like, do you see any competitive advantage that we have? Do you see something where we have a unique strength to offer the world?
This is really difficult to answer because, as I said a couple of minutes before, I do not have, other than the pharma and healthcare industry and the luxury a little bit, right? But are the Louis Vuittons or the Gucci's the future of the world, right? So I have my doubts. Pharma is a different, and healthcare is a different animal, and this is, I think, where we have strength as Europeans. I would try to tackle the topic like rather different. I would look into, okay, what can we do with our companies, with our conglomerates, and especially here, the mid-sized, the KMUs in Switzerland are as well very important for that. How can we leverage AI, agentic AI, digital agents? So are we able to utilize that technology faster than our other competitors and not our competitors, other geographical regions? Can we use and utilize this much faster with the way how we have set up our companies, our industries? That could help us to have a competitive advantage at least. But from an industry production perspective, I would have my doubts that we have a chance to really compete with the other two, because the speed of execution in China, I can only tell you, is second to none. It's really second to none. Whenever I go there, it's mind-boggling. It's really mind-boggling. I'll give you one example, very nice one. 3 months ago, I was the last time in China, and I was boxing against a humanized robot. And I tell you, it's really interesting. First of all, you cannot win. You cannot win at all. You can kick the robot, but the robot stands up every second, and the robot basically would be able to kill you. It's an artificial machine, and this machine could kill you. My question was, and I thought, maybe I should not bring the robot with me to Switzerland, because this is not a good feeling, right, to getting killed at your home place. But I was asking the Chinese, so can you tell me how long would it take that I can basically take a robot which is cooking for me at home, cleaning my home and doing my stuff? And now the answer of this company, which is one of the most high-ranked startups in this industry in China, said, come back in 3 years and we will hand it over for $30,000. And I'm pretty sure that the guy who told me that is right. Because I have seen that over the last couple of years, whatever they thought they can deliver, they delivered. And I could give you a lot of other examples from my experience. So the speed of execution in certain other markets of the world is so second to none that this is something which we really have to look at and have to adopt. We talk about something and they have already executed it.
But let's stay with that idea briefly, because the speed of execution issue is one that has come up on this stage quite a few times. But then there's the counter argument to say that, well, if you have, you know, a non-hierarchical or less hierarchical society, if you have democratic decision-making processes, then that is simply the trade-off that you have, that sometimes decisions take longer if you want to get everyone on board. So how much of this, you know, non-hierarchy would you say that we should maybe trade off to get to quicker, or do we need to trade some of it off to get to quicker decision-making?
Hierarchy in companies you can fix rather easier. So why are you not able? So I give you an example, right? So another example, which gives you a little bit of a flavor to your answer as well, or to your question. I met the co-founder during the pandemic, the co-founder of Timo in Shanghai. And I was in an office building with 12,000 people. And I was asking him during the conversation, so what do you do with your people, the 12,000 people? And this is only office building, right? They have hundreds of thousands fulfillment and delivery people in Shenzhen where they do the production. And he said, listen, I do the following, right? I bring the people in at 11 o'clock in the morning with my couch buses, similar to what Google is doing, from the suburbs of Shanghai. I offer them 4 meals and 1 hour gym, and I bring them back 2 o'clock in the morning. And then I said, what about the weekends? I allow them 1 day to work from home, which is Saturday, and Sunday they are back. And then I asked him, okay, why do you do that? And he said, pretty simple, I want to win. I pretty simple want to win. This is a competitive environment, and I do everything in order to win this competitive environment. And that has nothing to do with hierarchy. Nothing. This is basically attitude and the way how you tackle topics. I don't say that we have to work between 11 and 2 o'clock in the morning, right? Because there is always a consequence coming with it. And this is not us, and this is not the way how we... But I think to understand to a certain degree why others are in a very short time frame are so extremely successful, I think is helpful to ask the people, what do you do different? And this is what I recommend, but it has nothing so much to do with hierarchy, because hierarchy in a company you can influence as a leadership team rather quickly. So I would not use that as an excuse.
So I'm hearing another vote to this discussion that we had earlier about do we work too much or do we work too little. I'm hearing another vote for we work too little here in Europe. Yeah, more topic for discussion later. I do want to get a little bit more specific again and ask you sort of, you know, try and look into the future a little bit, ask you about the trends and scenarios that we see coming up. So obviously with this instability in geopolitics comes supply chains that are now more susceptible to interruptions. What are some specific measures that you would suggest the people and the businesses in this room take over the upcoming years to minimize the risk and the impact of these supply chain interruptions?
Work with the right partner, of course, right? So, I think what you need to do is, and I sometimes really wonder, you read and hear about supply chain disruptions in some of the industries because there are not enough chips, right? And sometimes it comes as a surprise. I think what you have to do is 2 things, right? First of all, the order to cash or the origin to destination supply chain always has and still has, even if during the time of digital disruption, which we are in currently, has 18 touch points. So every shipment from Asia to Europe or from US to Asia or vice versa, here you see that on the slide, has 18 touch points. So we basically, we tackle the shipment, not physically, of course, right, in the system 18 times. And that is very interesting because this is something you have to understand. Customs clearance, export control, terminal handling, offloading, onloading, port, airport to airport. So you have certain touch points. And it's interesting that for companies who do not understand what kind of touch points you have, how do you manage your supply chain, what are the uncertainties? I give you one example. During the pandemic, before we had, a couple of years before the pandemic, in our industry at least, we had this tendency of digital forwarders popping up everywhere. You might have heard about it, right? Digital forwarders tried to disrupt our industry, which was a good idea basically with new technology. But then COVID came and every single shipment was a project. Because there was no digital supply chain anymore. There was a phone basically, right? People were phoning, right? Where's my shipment? What can I do? So at the end of the day, you really need to understand your supply chain. You need to understand the complexity and you need to really see where the products are coming from and what do you do in case, and this is new to the world since a couple of years, what do you do when a crisis is hitting the environment, right? Whether it's a virus, whether it's geopolitics, whether it's terrorist structure, whatever, right? You need to simulate and stimulate your geopolitical muscle. I call it geopolitical muscle. You really need to understand what do I do in an if scenario, and that is what I can only recommend everybody. And if you go a step further, if you look at the transit time and the reliability of global shipping, what do you believe in global shipping, right? Global shipping, container shipping. What is the level of punctuality? So we have a schedule of ships and how much basically, or how many of the ships are coming in time.
I think we have the answer.
Here. Only a little bit more than 50% is accurate to the promise. And that gives you a flavor as well. If your supply chain is dedicated pretty much to just in time, with this accuracy, you have a problem. But you need to measure that, you need to understand that, you need to see that, you need to have the right partner, because otherwise you're running out of products. And that is causing disruption in your supply chain, in the capability to serve your customers.
I think that ties in nicely with what we heard from the commissioner this morning of making sure that you spend time understanding geopolitics and geopolitical developments and, like you said, strengthening that muscle. On a personal note, I know that you recently became a Swiss citizen. You now hold both the Swiss and the German citizenship. As an Austrian who cannot hold dual nationality, I'm quite jealous of that. But let's talk about Switzerland specifically as a location. Do you see Switzerland as relevant still, other than by offering low taxes, if I'm stated provocatively?
So, first of all, I'm very happy that I passed my test in the Canton Schwyz, in Schindellege, where I'm living, which is a little bit more difficult than in Zurich with multiple choice, right? So Switzerland as such, right? So I think why is Switzerland relevant, right? And what do we see, and why do we have our corporate head office here in Switzerland? It's not only tax, of course, right? But it's more than that. We have 30 nations working for us in the head office, and we are only 220, 230 people, so very small for a company of our size. And you have this economy freedom score, right? So there is an institute, Heritage Institute, together with the Wall Street Journal, on an annualized basis, based on 12 questions, who evaluating who has the highest freedom score in the world. Number one is Singapore, number two is Schwyz, or Schweiz, yeah? Switzerland, sorry. Switzerland. And the question is, what are the criteria for this score? And it's pretty much about law, regulation, size of government, right? Access to capital, and the way how easy you are able to set up your businesses, the way how easy you can do businesses. And this score gives you a pretty good flavor how well ranked Switzerland is in comparison to other countries. And that is definitely a strength, and I can only recommend everybody to really, really push that and don't give that advantage, that competitive advantage to others.
What do you think maybe the rest of the, or well, not the rest of the European Union, but the rest of Europe can learn from Switzerland?
Oh, there is. You see, since a couple of weeks, I've seen more and more this discussion in the society about performance culture, Leistungsbereitschaft und Leistungskultur. And I think this is the basic. This is the basics, and this is the basic for wealth and for growth. Nobody should believe that growth is coming from not doing anything, right? You have to work hard. You have to understand your customers. You need to really understand what the end customer is looking for in terms of solution, customer experience. And I think I can only encourage, if your question is what can others learn, to really look at the position of Switzerland. We here in Switzerland have a much higher performance culture, I would say, than a lot of other European neighbors.
So the attitude of really working hard, and yeah, again with the discussion, are we working too much or too little? We should. You say we should work harder.
I haven't said that. I have only basically. Don't get me wrong, right? Whether you like to work harder or not, this is your choice, right? I only try to emphasize what I see traveling the world, and why other companies are growing so much faster, right? To a level within a short period of time, and what have I seen? I'm not saying that individuals have to work harder or less. This is an individual decision, right? But growing your business, being at the forefront of everything what you do in your industry, I think this is something we can really adapt and should look at in order to make the difference.
And that requires hard work, yeah. Thanks so much. I think we can move on to the audience questions, and the first one is very interesting. So you mentioned going into markets that are growing and industries that are growing. So what's the next market you will tackle once the AI bubble bursts?
So first of all, the AI bubble will not burst before 2030. Because I talk to the leaders of these companies and their order books are full. So in 2030, I might retire. So this is my successor who has to answer the question. But at the end of the day, is you do not know. Because e-commerce, we didn't see coming at the speed. The hyperscalers, we didn't see coming at the speed. And I'm pretty sure that in a couple of years, there's other markets. There is, for instance, where we are focusing as well is on two other customer segments. We focus pretty much on India. If you go to India currently, you have a little bit the feeling China 20 years ago. People are very motivated, 1.4 billion, the highest population, the largest population in the world. They have the capabilities. They still lack a little bit of infrastructure. But the educational system, the willingness to grow, to win in the subcontinent in India is second to none. So we focus pretty much on India. And what we do there is we build up warehouse and distribution centers, big time, because we know that the consumption, India has a capital of $2,500 still, China has $25,000. So you see, with a population of 1.4 billion, if that is growing, which will grow, and we see that already, to be at the domestic market in India is not a bad thing to be. So these are markets where we look at industries. Let's see, I do not have the silver bullet. If I would have it, I would not share it here. But at the end of the day, my belief is that there is another hyperscaler or e-commerce or anything else coming in the next couple of years, which then needs agile behavior for us to cope.
So there's always going to be something that will be growing and that will be an opportunity. Thank you. Interesting question on sort of a more macro level. Which of Europe's dependencies are politically intentional and which emerged quietly through a lack of strategic oversight?
Can I take the joker for this question, basically, right? So this is a good one, but a very, maybe as a business guy, I'm a little bit, because politically, I'm not a politician, right? I think, I know that we have, and this is as well a pretty interesting question, we have 66,000 or so in the European civil servants, right, in Brussels, right? So people paid by the European Union. So the question is, you can say this is a lot and this is a monster, But nobody has to figure how is that evaluating or comparing the individual country quota. Is that more or less, right? I would say this is something where the European Union should look at, right? So how much bureaucracy, how many people do you need to serve? Because as more as you have, as more ideas do you have in order to come up with new rules and regulations. So this would be an area for me to look at as well.
Thank you so much for speaking to that, even though it's not your core expertise. This is, though. Kühne and Nagel seems to have key data that can be used to define strategies for Europe. How much of that is public? Would your company be willing to share that data in a sanitized manner?
The answer is yes, but the question is the price tag. Pretty simple. Somebody comes to me and offer the right price tag, I would. Without, no. Does it make sense?
Yeah, I mean, spoken like a true pragmatist, I would say, and I guess that's your answer. Whoever asked the question can then approach you during the break or later. But is any of, I mean, it is an interesting question with an interesting core, right? Because is any of this data publicly available, or is there any publicly available data from your company that you recommend leaders watch?
No.
To get a sense of?
No, we don't share our insights. We don't share our data with third parties.
Is there anything that you can share with us now? Any interesting trend that you're seeing in that data now that maybe the people in this room don't have on the radar yet?
In addition to what I shared already, I would be a bit careful. I think what is pretty clear is that in a couple of years, most of you will drive an e-car coming from China. Whether you like it or not is not the question. The quality of the Chinese car manufacturers is second to none in the meanwhile. Give an example, I was with Xiaomi. They have two new cars. One is a U7. It looks a little bit like a Ferrari Puro Sangue. And the Ferrari Puro Sangue, you have to pay 750 grand, I guess, currently. If you want to drive it for this car, you pay 50, and it's absolutely a copy in look and feel. The way how they have developed their capability to build cars, which are really from a capability perspective, is really as well second to none. So I believe, watch out, this will be a trend. More and more Chinese e-vehicles will come into this marketplace. They are pretty much advanced in terms of their battery distance capability. So the range is up to 1,200 kilometers already. And Huawei a year ago already had a charging system of 1 kilometer per second. So you go to the loo at the gas station, and then you come back and the car is charged. Huh? So just to give you a little bit of a flavor what's coming, right, in certain markets, but more I would be a bit hesitant to share, right? So from our data insights.
That is more than nothing. So thank you for sharing that. That's something already. Let's look at the next audience question. How does the role of a global logistics provider change when trade becomes a geopolitical weapon rather than an economic exchange?
This is a good one, and this is very tricky for me as well, because we do business with China and the US. And I'm member of an advisory council to the Shanghai Mayor, and at the same time I'm traveling to a regular basis or very regular basis to the US. So, and the only area where we as a company, or the main area where we as a company are very selected and where do we not play to a great extent is the defense market. And I know Mr. Obermann has shared a little bit of his views this morning. As an international global logistics provider, you do business with everybody. And you have to be really careful that you do not things which is not appropriate for certain governments. So I would not engage in certain industries where I do believe that either or could have a negative notion on our activity. So that's really a topic. Sometimes you have to say no to business opportunities as somebody who is in global business not to put too much pressure on the other side.
So that strategy differs from what we heard from René Obermann this morning. He said, businesses really should understand that they no longer serve just their shareholders, but they fulfill a societal role. And now what you're telling us is more, stay out of it, stay as neutral as you can.
In my business, yeah. So I serve the world. I serve 50% of my business, basically. If you look at the two geopolitical powerhouses are coming from one side, the other side is the other 50%. Okay, not ignoring Europe, for instance, right? Or in particular. But sometimes you have to accept that you are in a global business and you have to deal with different interests, and you should not put too much pressure on certain toes in order to avoid a clash.
And that is, I guess, where political realities come into that. Thank you so much, ladies and gentlemen. The CEO of Kühne Nagel, Stefan Paul.